my name's James Nicholson. Welcome to my YouTube channel. The Bank of England meeting is this week, and so potentially interest rates could go up, interest rates could go down, or they could be held. So in this video, it's actually been one of the most common questions in the last week. What do I think is going to happen at the Bank of England? What does the rest of the market think is going to happen at the Bank of England this week? What impact will that have on house prices? Well, we're going to cover all of that in this video and more. Now, if you're new to the channel and you haven't subscribed already, what are you doing? We've got new content every single day on growing a property portfolio and keeping you informed on what's going on. So while you're here, make sure you smash that subscribe button and hit the bell notification. And while you're here as well, smash the like button, tickle the like button, do something to that like button. If you do that, that helps me with the YouTube algorithm. We had 600,000 views last month. So make sure you do that because that really helped us get there. So what's going on? Well, this one's a bit of a weird one because most of the Bank of England meetings, the inflation data actually comes out first. That's not happening this time. So the Bank of England meeting is this week and the inflation data is next week. And so I don't know why that hasn't been moved and why the bank doesn't change that date, because normally they're basing their movement off the actual inflation report. Now, of course, they're going to look at other things. So they will be impacted by what does the Federal Reserve do. And so we have a phrase, a lot of people have the phrase that the Bank of England, they follow the Fed. Now, the Fed is softening on interest rates, but the Bank of England isn't so much. And so what's happening is both sides of the pond, as they say, have got big elections next year. And so Biden obviously wants to win. The Conservatives, I don't know if Rishi Sunak will still be in charge, but the Conservatives obviously want to win in the UK as well. And what they don't want to happen is for a house price crash. Leading into an election, a house price crash, high inflation still, unemployment, those things are definitely not going to help you and probably are going to lose you that election. And so the government, while they don't dictate interest rates, they're definitely going to be putting some pressure on the Bank of England and the Federal Reserve, likewise, to start reducing interest rates. Now, markets are starting to price in an interest rate cut, and it's looking like it will be the summer. Now, the Bank of England, when you listen to their language in interviews, which they're having a lot of at the moment, they're saying, and they have to be seen to be saying, that we're not cutting interest rates anytime soon. Now, even if they had that belief that they're going to cut interest rates in January, February, March, or even this month, they're not going to tell you that. And the reason for that is that the current rate would then be ineffective. It wouldn't be doing what they said they want it to do. And right now, it's constrictive. It's making people suffer a little bit of pain in order to bring that inflation down. They want spending to slow down because when that happens, inflation can start moving down for sure. So I don't know where inflation data is going to hit this month. I do follow a website called Trueflation, which is interesting, and that's got inflation currently at around 3.9%. So it'll be interesting if that's where we end up close to that. So this week, what do I think that's going to happen? I think that the Bank of England are going to pause with the interest rate rises again. I think you're going to stick at the 5.25 level. I don't think we're going to go down for sure. 100% I don't think that we're going to go down. I think that there's probably a 5% chance that interest rates could go up. But I do feel that the bank thinks that the rate set currently where it is doing the job that it needs to do. I think it's bringing down inflation according to them. And I think that they're happy with the way that it's moving forward. Now, going forward, there's a lot of articles in the Financial Times and other places this weekend, and they're saying that the Bank of England might not be able to follow the Fed when interest rates do start coming down immediately. And the reason for that is that our inflation in the UK is just sticking really high. America has had inflation around 3%. Some places in Europe are at 2%. And so we've had this extra high inflation for a longer period than everybody else. And that has caused the fact that the Bank of England aren't going to have that opportunity to cut rates maybe as fast as we might hope. Now, the Bank of England rate is one thing. What's more important to you, to me, is the actual money that we can borrow from a bank and what rate that's going to be. And I feel that if we get another pause this week, which is what we're likely to see, that still gives the banks a little bit more confidence. And so that might see what we call the swap rate drop. And if we see the swap rate drop, we've got some interest rates at the moment from lenders that you can borrow from with average fees, not crazy high fees. We've seen some rates at 4.5%. And I think that if the swap rate does drop following another pause, that you might in early January start seeing some rates that you can actually get and you can borrow. You might need a 40% deposit on these for 4.25%. I think that's where you could start getting towards. Now, every time we talk about these rates, a lot of people will say, well, who has a 40% deposit? And you're right, most people don't. So it's not actually looking for a new buyer that's got a 40%. These are going to be suitable for people that are remortgaging, that have got a big chunk of equity in their property. Of course, lots of first-time buyers, lots of new buyers, you don't have a 40% deposit. So this kind of rate, the 4.25, is for people refinancing. Now, how's this going to impact house prices? Well, I don't think house prices are going to move massively off this week's interest rate decision. I think a pause might make a little bit of difference in the market. I think where you're going to see the people that are sitting on the side, because there are lots of those people. There are lots of people that can afford to move, but they're just sitting and waiting. They want to see, is this the bottom of the market? Are rates coming down? And they're not going to all jump into the market until you start seeing the Bank of England cutting rates. I think when that happens, even if it's not a huge cut, I think there'll be a percentage of people that are sitting out there waiting for the right opportunity, the right property to buy. They will start coming back into the market. They'll start shopping, and that will be a good thing for everybody. Now, with regards to house prices, while inflation's still high, remember, house prices, that means are actually coming down. Because if a house price sticks at 100 grand, we've still got 4% inflation, then the actual value of that house has actually dropped by 4% at least in that year. And so it's kind of what we call a silent property crash. And so while house prices are going down in real terms, so a house that was 100 grand might now be worth 98, take into account also the inflation, the buying power of what that 98 also can buy is actually getting cheaper. While on the other side, some people have also had pay rises, on average around 8%, I think is the increase in pay now. Not for everyone, but some people have had that improved affordability. So I think it's going to be a pause this week. What do you think? Make sure you comment below. Do smash the like button. Remember that really helps us. Let's get to 18,000 subscribers this week. Smash subscribe, hit the bell, go and check out some more content on my channel. Start with this video right here.